It's time for the Property Podcast, where every week tens of thousands of property investors, new and experienced, join together to get news, knowledge and laughs at our expense. With me, Rob Bence.
And me, Rob Dix. Join us every Thursday morning for your weekly dose of property ideas and motivation. Then head over to our website at thepropertypodcast.com to keep the conversation going. Now though, let's get started.
Hello everyone and welcome to the Property Podcast. I am still Rob B. With me is still Rob D. And have we got a cracking episode lined up for you today?
Not going to lie, I'm a bit nervous about this one. So the title of this episode is Insurance and How to Get Free Beer. We are going to find, as the episode goes on, that it's more heavily weighted towards the insurance side. It's got to be honest with you. Title might be a bit of a ploy, but I remember saying at the beginning of the inflation episode, Rob, but bear with us guys, it's going to be fun, honest, and I feel like I should have saved that disclaimer for this episode, because there's not a lot that's less inviting in an episode title than the word insurance.
Yeah, exactly. Rob and I had to fight over who could do this episode. Not who wanted to do it, who had to. No, just joking. I promise you it's really, really good. And the free beer thing isn't a gimmick. We honestly will tell you how to get free beer at the end. But stick with us for the insurance, because as Rob said, Inflation episode 24 is probably our most talked about episode. So if you haven't listened to that because you skipped it because of the title, go back. But stick with us on this episode because we know you'll get bags of value. Okay, Rob, let's start with our news story this week. And it's one you've picked out. So what was it? What caught your eye?
Well, this is a story from monovator.com, which is a fine investment and personal finance kind of blog, which I read regularly. It's not really a news story, but it is something that was new this week. And it's talking about a topic which we've talked about many times in the past, which is the issue of whether it's better to rent or to own. And we've spoken before about how many investors actually rent their primary residence while owning lots of investment properties, which makes sense on a lot of levels. So if that's something that you've been struggling to get your head around, I think this is a really interesting story, because a lot of people have grown up being told about how renting is just throwing money away and owning is the only way forward. And I think that this post does a really good job of breaking down the arguments in the other way and actually finding out that yes, when you're renting, you're paying money to someone, but then when you're owning, you're paying a hefty proportion of your mortgage going towards interest. And by the time you've factored in all the kind of fees and things that come along with owning, there's not all that much in it. And it's all a bit of a bet on what's going to happen to the future of the housing market. Obviously, this isn't saying don't own property. We're going to shut the podcast down. Absolutely not. But when it comes to your own home, it just gives you a really interesting perspective on it. So that link is going to be in the show notes. I think it's well worth a little bit of a read over the weekend. And the show notes for this week are going to be at thepropertyhub.net/insurance advice.
Well, of course, the point of that news story is it just emphasises what we're doing is so good, you know, whereas buying can take money away from you and renting in some cases can be more efficient. Buying and then have someone rent from you is the perfect hybrid. In fact, that's why, you know, Rob, we both currently rent because it suits our lifestyles, but we have portfolios, you know, that we let out because financially that's the best thing for us both right now. And I know a lot of other people who are doing very similar things. So, interesting article. I've only started to read it because you only passed it through this morning, Rob, but I'll definitely finish it off because it looks really good.
Yeah, well worth it. But don't be sneakily reading while we're talking about insurance. That's what we're going to move on to now. Topic of the week, insurance and how to get free beer. The free beer is coming, but first the insurance. And this is something that we do get asked about a lot. We've had this episode on our list of kind of episodes we're going to record for a long time. We keep putting it off, but we do keep getting asked questions along the lines of, do I need landlord's insurance? So that's what we're going to try and set out to answer. In reality, a couple of points to start with. Firstly, we are by no means experts on this topic. We're going to share with you what we know, but I'm sure there's going to be a lot more that other listeners can add to this, so we're going to have a discussion about it afterwards. And secondly, well, there really is no kind of set product called landlord's insurance. Really, it's just an umbrella term for a lot of different risks that you're exposed to as a landlord, which you can cover yourself against. Now, some of these risks you're definitely going to need to insure yourself against, and others are more optional, and it depends on your attitude to risk and or manner of other things. So what we're going to do in this episode is we're going to talk about some of the major components, what they are, what you need to look out for, and how to work out exactly what kind of insurance you need. So of all the different types, there are probably two major elements that you'll pretty much definitely need. So, Rob, what is the first one of those?
Well, the first one is buildings insurance. And yes, you need this. And if you haven't, straight away after this podcast, pick up the phone or get on the internet and sort it out. So if you have a house, you can't avoid it. And if you have a mortgage, it will be a condition of the loan to have a certain level of cover. So if you haven't got it sorted, you could be breaking the terms of your mortgage. Buildings insurance is an absolute must, something you must have. Now, if you have a flat apartment, then the chances are it'll be covered within your service charges by the freeholder. So it's something that will be done for you, so you don't have to worry about. But if particularly you own a house, if you haven't got it, or you aren't quite sure, or you're thinking, I wonder when that expiry was, go and check, because it's something you definitely need. The very basic level you need is FLEE, and that obviously stands for something, and that's fire, lighting, explosion, and aircraft. I'm not going to get into the details of each and every one of those, but they're the basic level of cover, and I'm sure you can guess what most of them are. On top of that, you can add cover for flooding, escape of water, subsidence, theft, and so on. Every risk you insure against will add to the cost of the premium, and some, like subsidence, will have higher excesses. Now, the level of cover you have depends on your attitude to risk. But actually, surprisingly, and I didn't know this until this episode, 33% of all claims are for escape of water. So that makes sense to have. Make sure you've also covered for trace and access, because a lot of damage can be done when finding the source of the leak.
Yeah, so that's your buildings insurance, unavoidable, and then you can just choose which elements of it you want to have on there. Another thing which, as a landlord, you're going to probably want to have covered somewhere is public liability insurance. Now, you can get this as part of your building's policy, or you can get it standalone or bundled in with something else. But essentially, public liability insurance covers you for any claims that are made against you by people on the property. And those people can be tenants, tradespeople, or anyone else. Like, weirdly, even if someone breaks into your house and injures themselves while you're there, you're liable. This is really important because it might seem unlikely that anything is going to happen, but if it does, it can be serious. So, claims can run into the millions. For example, if a tenant trips on a bit of carpet, falls downstairs and ends up paralyzed, you can pay a lifetime of their care bills as well as their compensation. We could be talking about millions and millions of pounds here. So that's not something that you're going to want to take on as a risk on your own shoulders, because if something happens, then you're pretty much instantly bankrupt. So public liability insurance is something you're going to want to need. You might be covered for it as part of your building insurance already, but it's worth finding out. The other important thing to note about public liability, apart from the fact that you want to be covered for a very high limit, is that insurers really don't want to pay out on huge claims like that. So what you want to do is make sure that you've read the small print of this in some detail and make sure that you're not invalidating the policy in any way that will give them a loophole to get out of paying it. As we'll come to later, we'll find that the insurers are very good at getting out of paying for claims, and you can find that the reasons are pretty obscure. If there's a subclause in there somewhere about having a particular type of lock on the door, then they might not pay out for a completely unrelated claim like a liability matter. So we'll talk about it more later, but it's really important that you do read the small print, however not fun it is, and make sure that you're doing everything completely by the book. So that's the big two. That's buildings insurance and public liability insurance. They can be one and the same, or they can be separate.
So they're the big two. But what other risks can you insure against? And actually, you could ask what you can't insure against, because working through many transactions that I have with investors, I found that small little things can come up now and again, and you can get indemnity insurance against the smallest and weirdest of things. It's amazing what they can do now. Just a small amount of cover can get a deal through. It's fantastic. Honestly, insurance can be interesting. But here's some other risks that you may want to consider insuring against. Malicious or accidental damage by the tenant. Sometimes standard, sometimes optional. Terrorism. I know that does sound extreme, because it is, but it also covers you if a tenant blows the house up while trying to make a bomb. Landlord's content includes carpets, curtains, and more if you're providing a furnished property. Doesn't cover tenant's contents and vice versa if the tenant has any policy for themselves, so be aware of that. Non-payment of rent, rental guarantee insurance. There are all different levels of that as well, so read the small print. What may sound fantastic may mean that you have to wait a fair bit or pay out a lot in excess before you get your hands anywhere near it. So make sure you check out the small print on that. Another risk you can insure yourself against is legal cover. So if you need to take a tenant to court, you're sorted, for all the costs included. Now, part of Yellow's rental guarantee insurance, but not everyone's, is that it covers that. Something we went out and got a very, very expensive policy for our investors. I call them investors more than landlords, but our investors who work with us. And there's also no access for collecting the rent or getting the rent paid back to you or delay dates before you can start collecting. We actually, when we looked at insurance, went for a high level one. And I think you should be very careful when you're looking for your own insurance. The cheapest doesn't mean the best. What excess do they have? What sort of timeframes have you got before you can put a claim in? Make sure you look at all those things, because actually you may be looking at a false economy, and paying a bit more for a substantially better cover may be worthwhile doing. That's what we did, but make sure you go through that process and look into it yourself. Now, as we said at the beginning, these are more optional. And some of them will make up part of landlord's insurance. Some you can tag on. Some won't be in there at all and you have to specifically ask for. But they're the type of things you can be thinking of now of what you may or may not want to put in.
Yeah, exactly. You're right. I mean, people talk about insurance, like, I need to get insurance, as if it's something that you just pick up off the shelf. But there are so many different parts to it. There are all these different components that you can add on. And yeah, you're right. You can indemnify yourself against pretty much anything. It's amazing. And then for each component, there's going to be all these different levels of cover. There are going to be different exclusions, different excesses. There are just so many different aspects to it. And it is really confusing trying to work out exactly what it is that you need and exactly what you're covered against. But they're the main components of insurance. Let's talk about, in general, the most important 4 things to know about when it comes to insurance. Well, the first one's an obvious one. A normal home insurance policy will not cover you. For some reason, landlords sometimes think that it will, but it absolutely won't, because if you claim that you're living in a property and you're not, well, that's the insurance invalidated straight away. It also won't cover you for public liability, damage by the tenant, or anything else. So absolutely not what you need. You do need a special policy tailored to landlords to cover yourself against the risks that landlords face. Second point, as Rob has already said, cheapest is not always best. So many landlords just choose the cheapest policy without even reading it properly. And hands up, I've done this in the past. It's tempting to do. And if you think that, I'm never going to need to claim on this, it's tempting to just go for the cheapest option you can, which is going to have lots of exclusions and high excesses and all that kind of thing. But it's really counterproductive, because the last thing you want is to have to pay out for insurance, like grudgingly, thinking that, well, I'm never going to have to claim on it, but at least it's there and I'm safe. Then find out that when you eventually need it and you do need to claim, you can't. So there's no point doing that. Cheapest isn't necessarily best. The third point, which is probably the most important of all, is to disclose everything to the insurer. Insurers always try to find their way out of paying a claim, even if it's totally unrelated. So I touched on this earlier. So for example, many insurance policies will not cover tenants who are on benefits, or if they will, then they just need to know about it so they can put that in specifically into the terms. So if you haven't told them that your tenants are on benefits, they might not pay out for something completely different, like storm damage to the roof, which has got absolutely nothing to do with the tenants who are living there, but it's still a reason for them not to pay. So this is where it becomes important to actually read the small print, because you could find out that completely unwittingly you're doing something that invalidates the policy, and it gives them that get out that they're looking for. And finally, check what happens if the property is empty. So this is where things get especially tricky, and it comes down to reading the small print even more, because insurers have different rules about how long a property can be empty for between lets. And some of them will say that you need to notify them. Some of them will say you're okay for up to a certain amount of time, then you need to notify them. It's all over the place. And it's very important, because you could find out that if the property is empty for more than, say, 14 days, a load of the provision goes away and it reverts to just the fire, lightning, aircraft and explosion that Rob talked about. You just don't know. So it's really worth checking out what happens to your insurance if the property is empty. And if you know that you're going to have a gap between tenants while you're doing some work or something like that, worth speaking to your insurer and finding out exactly what the deal is. If the property is going to be empty for more than a month, for example, while you're trying to sell it, you're probably going to need a special kind of policy for that. So they're probably the most important 4 things to know about. And I'd say of those, the most important one of all is to not try and hide anything. Disclose absolutely everything to the insurer. Otherwise, you're going to find out that you might not be covered when you think you are.
Woo! There's a lot on insurance there, but actually, that was a quick overview because there's so much detail that you can go into with insurance. And as Rob stated at the beginning, we're far from experts. Rob put these notes together, and I've learned from this podcast too, because the amount of detail you can dive into on insurance is incredible. If you're making decisions, remember, this isn't the whole of the picture, it's just a glimpse. Remember, don't go just for the cheapest insurance on offer. Make a proper assessment of your risks, know exactly what you're covered for, and make sure you don't accidentally invalidate the insurance by not disclosing something or not being truthful on your application. Just like mortgage brokers, you can save time using an insurance broker. They do exist. And you can explain exactly what you want and they'll find it for you. This can be very useful if you have an unusual case like a property that'll be empty for a while. And if you are really stuck, Rob and I recommend an insurance product to people who work with us at Yellow Lettings. So any investors that come through, we recommend a product that we've used before. We found it off the back of putting Yellow Lettings together. Although we don't advertise it anywhere else, if you really are stuck and you do want a recommendation, then just drop us an email. Probably best hello@yellowlettings.net. Just mention this episode, mention that we said we had a recommendation, and we'll send it on to you. But it's not something that we advertise, but it's something that we pass on as a recommendation to our investors at Yellow. Is that everything, Rob?
Well, I don't know. I think we've forgotten something. What was this episode called again? Insurance and how to get free beer. We haven't talked about free beer yet.
Free beer. I don't think anyone's going to be interested in that. It was, I'm sure, all about the insurance today.
Well, we said it. Shall we just run through it quickly?
Go on, Rob, because we actually have got ways to get free beer.
Okay, let's go through this. Okay, first way to get free beer, get a job in a brewery. Seems pretty obvious.
Complain to a beer manufacturer and hope they send you money off vouchers. Is another way.
You could ask for a free sample. You know, in pubs, they often give you like free samples of the ales and stuff. Just do that, but keep going back wearing different disguises and putting on a funny voice and seeing how many free samples you can get away with.
That's a lot of effort, so you must really want your free beer if you do that one, but it can be done. Another one is make friends with the flight attendants on a plane. I've done that and I've got extra beer on a plane before, so I know that one works.
Okay, that's a universal one, a bit more of a niche one. There's a bar near Valencia in Spain called the Casa Pocho. I'm not sure how you pronounce it. But apparently the owner will give you free beer if you abuse him in Spanish in a way that he hasn't heard before. I have not tested this one myself, but apparently if you find yourself near Valencia, give it a try.
Tell your friends you've heard some great tips on how to get free beer, but you'll only share with them those tips that you've just heard if they buy you a beer first. And actually, I've got one final one to add to this. Rob, we've got our first property podcast meetup coming up in January. And if you've listened to this episode, if you've listened to the insurance episode and you don't feel like you actually have got value out of it, as dull as the subject can be, if you haven't got value out of it and you haven't learned from it, come and see me at the meetup and I will buy you a free beer. How about that?
Can't say fairer than that. There you go. So you've got your insurance and you've also got some ways to get free beer. So we've delivered on the promise of the episode. And as ever, everything we've talked about will be in the show notes, which are at thepropertyhub.net/insurance advice. In those show notes will be a link over to the topic in the Property Hub where we talk about this episode. There's always a topic for every single episode. We'd love to hear your tips on the insurance or the beer, anything that you've got to add or any questions or anything. We'd love this to be the start of the discussion rather than the end, as always. So do get over there and let us know what you think.
Absolutely. Right. Okay. A favourite part, and normally quite entertaining part of the podcast, is the resource of the week. And Rob, our podcast was nearly delayed because you showed me this resource.
Yes. So as Christmas is coming up, I thought I'd share a site which could be useful for getting unusual presents. So for people who've got everything and you're not sure what to get them, check out ungrow.me. So the idea with this site is that you've probably heard of Kickstarter, which is where people put up projects to get crowdfunded. And then this site collates projects which have been successfully crowdfunded and are now on general sale. There are a lot of pretty unusual things. A lot of it is very sort of tech focused. So if you've got anyone in your life who likes gadgets, there's going to be loads of stuff there. But the great thing is because these products are brand new and most of them aren't on sale in any shops or anything, you're certainly going to impress people because they will not have seen these before. So well worth a browse through, but as Rob's already found out, very distracting.
Yeah, it is. Take a look for yourself. You still got time for Christmas, so have a look. There's some brilliant stuff in there that really is, honestly, some of it's gimmicky, but some of it is absolutely fantastic. So have a look. And yeah, if you're struggling, it might be a great resource to find those last few Christmas presents. Okay, before we tell you what's coming up next week, let's do our review of the week. And this week it's from JMoss84, and he or she says, cracking listen. The two Robs do a phenomenal job of picking a specific and valuable discussion for each episode and delivering them in a way that's excellent for property newcomers. Based on the way things are going, I'll have no pension when I retire, and I've been saving aggressively as possible to get involved in property investment. So you can imagine my delight when I found the answer to a huge number of my questions listed, one after the other, in the great podcasts. Not to mention the news stories and the resources they bring to the table every single week. Magic. Thank you, J Moss. That's a brilliant review. As they are every week. Thank you so much to everyone who does leave the reviews. I promise you, the reviews keep us going because, you know, to do an episode on insurance, you need motivation. So these amazing reviews that we're getting on a regular basis really do keep us motivated and happy. So thank you so much to everyone who battles with iTunes to leave us one. So next week, we have a predictions episode. Hey! So a predictions episode, actually, it's a review of our predictions. So have a listen back to our predictions at the beginning of 2014. Lots of investor experts, Rob and myself as well. We went and put our predictions down at the beginning of the year. We reviewed how we did last year, and then we talked a bit about what we thought would happen this year. Have we made a fool of ourselves? Every investor had different insights on what they thought would happen. So not everyone was right. So clearly some people were wrong. Who was right? Who was wrong? Who was close? And who was miles off? It's going to be entertaining. Some experts may feel a little nervous next week with this coming up. I think you'll find this very entertaining and very useful too, to show you how hard it is actually to predict what's going to happen in a 12-month period. So make sure you join us next week for our predictions of 2014. How did we do? Okay, everyone. Well, until that episode, which should be very upbeat, very exciting, and very entertaining, just like today's episode, of course. Until then, thank you for joining us. Have a great week, and we'll talk to you next Thursday.
Bye-bye. Thanks for listening to The Property Podcast. Make sure you join our mailing list at thepropertypodcast.com.
And remember, we love 5-star reviews. Rob even loves them more than air miles.